there, this is attorney Sarah Holmes of Holmes Business Law P.C. We are a law firm based in Philadelphia and the suburbs where we provide general counsel subscription services to business owners. One thing we wanted to talk to people today, because we handle a lot of business and sale purchase work, is what is the easy guide to buying a business? So there's usually a number of steps involved if you want to buy a business. So number one would be always evaluate the criteria that you want for a business. So for example, figure out what type of industry you're interested in, what type of lifestyle you want to have, and of course, what is your budget? Businesses can be priced all across the board, from some tens of thousands of dollars to millions of dollars. So work out some preliminary answers to those questions first. It's really important to understand what kind of lifestyle you want once you buy this business, especially if you've never owned a business before. There's certain businesses you can buy where you can be a fairly hands-off, laid-back owner, meaning you don't need to be involved in the day-to-day of this business. There's other businesses that require your presence every single day. So you decide which one you want. Obviously, the more hands-off you are, the more you are likely to need staff and things like that. So figure that out first. Then is locate a business that you want to buy. A lot of people now use something like Biz Buy Sell, or maybe they know someone selling a business, and it would be browse the listings and reach out to the broker that has the business listed. Once you reach out to the broker, they're likely to ask you to sign an NDA, which is a non-disclosure agreement. That means they're going to give you certain confidential and sensitive information about this business that they don't want you passing on to other parties. So make sure you sign that, and once you have the NDA in place, the broker or the business owner should then start to provide you with some records about the business, mostly financials. You should get ideally 3 to 5 years of financials about the business. That includes tax returns, and that means ongoing reports from their accounting software, like a QuickBooks or something like that. And you should be getting profit and loss statements, you should be getting the balance sheet, and you want to see the cash flow of this business. Those are really, really critical things to get into place. Now, if you like the financials, and hopefully you also have an accountant on your team as well, this is the time you might want to start assembling your team. So your team should definitely consist of an accountant, and then you're going to need an attorney as well. So you can start going over financials with the accountant, see if the numbers match your criteria for the type of business you want to potentially buy. And if you like it, typically at that point, business broker may ask you to submit a letter of intent, or LOI, which is basically like a term sheet that would offer the terms on which you might be willing to buy this business. So that might outline things like what you're willing to pay for it, when you want to close, if you're asking the seller to provide any financing, and during the period of due diligence, which is when you're going to do the rest of your homework on this business to make sure it really is something you want to buy. At the LOI stage, I always advise people that this is a critical stage to get an attorney involved. People that come to us and we get involved in the LOI stage, I feel have much better outcomes and better negotiations, because we're able to tell them up front what to do and what not to do, what things they can ask for, and what terms we typically negotiate. The broker does not work for you. The broker is a neutral party helping the seller sell the business, and so he or she obviously has an interest in getting the business sold, but it's not really representing one side or the other. So the broker can give you information, but they're not out there to protect your interests. Your attorney would be. So I strongly advise you get a lawyer involved at the LOI stage. Now, once you have an LOI in place, the broker will typically send that to the seller. There may be a bit of negotiation or back and forth, but if you agree on some principal terms, then they'll say, okay, now the period of due diligence is going to start. Due diligence as a buyer is extremely critical for you. This is now where you can go uncover where all the bodies are buried in this business, get more information about it, and make sure that you are really comfortable with this purchase. So we have a due diligence checklist that you can actually download off our website, which gives you a really comprehensive overview of things that you might want to ask for in due diligence. But certainly as a base matter, you want to get all the corporate records for the business. You want to get payroll records. You want to know what kind of IP they have. Do they have registered trademarks? You want to know if they have contracts with clients. You want to know if they have a lease. Like basically everything legal and financial related to that business is what you are entitled to find out in due diligence. Some businesses may also let you start talking to some of their key employees so you can see what they're like, how the business runs, if they're planning to stick around post-sale. And once you're satisfied with the due diligence period, now typically the parties will move to actually drafting and executing the purchase agreement. So once you get to that phase, hopefully by then you've figured out how you're going to finance this business. If you need bank financing, you're going to need to start that process pretty early on. In fact, at the LOI stage, you're going to want to already have been talking to banks about whether or not they would finance this transaction for you. If it's the type of business that you're going to pay cash for, then no worry about the bank. You may want to ask if the seller is willing to extend some financing to you, and that also usually requires some other type of negotiation as well. So once you get through all of that, you get a purchase agreement in place, you're gonna have to think about what other types of things you need, whether you want the seller to consult with you after closing in order to provide some assistance in the business transition. You have to figure out whether there's a commercial lease you need to get. If you're buying any property as part of the purchase, that's usually a separate transaction that has to close. And then you're gonna figure out where you're putting all these things you're buying. If it's an asset purchase, you will have to have set up a new business entity for yourself to move these assets into. And so this can be kind of a long process. If things go well, maybe a 90-day, if you have to get an SBA loan, I would count on these things maybe taking like 6 months. Often the banks will tell you it takes much less time, but in our experience, there's always something at the end that holds up the closing. It's very much like buying a house, except there's just more roadblocks in the end to closing this deal. So in short, that is like a brief 30,000 foot view of purchasing a business and what would need to go into that. Of course, if you have any questions, you need help purchasing a business, feel free to reach out to our office. The number is 215-482-0285. Thanks.